Good evening, everybody. How y'all doing? How y'all doing? How y'all doing? Can y'all hear me okay? Hopefully y'all can. Hopefully y'all can. Oh, y'all can't see me because my camera turned off. It helped if I it helped if I turned my camera on. You feel me? It might help out if I turn my camera on. Man, I um I was knocked out. I was knocked out. How y'all doing this evening? Hopefully we got everything we need here. Oh, excuse me. Uh, Hopefully we got everything we need here. Not there. All right. What's going on, man? It's your boy. Uh-oh. What did I do? Oh, we good. And I got a piece of lint on my forehead. Well, y'all ain't tell me I had a piece of lint on my forehead. Had a whole piece of lint on my forehead. All right, man. What's going on? Good evening, good evening, good evening. If it's your first time tuning in to Tim's Tidbit, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., aka Aranya Grande. We in the dungeon, so I don't have my normal background. We in the dungeon, but as usual, y'all can see I got keep Big Spider with me. You feel me? Big Spider, stay with me everywhere I go. But you are now in tune to another episode of the Intraday Price Show Recap. Yes, sir. Yes, sir. Yes, sir. How y'all doing, man? How y'all doing today? What's going on? What up? I got Jim in here. Got Deborah up in here. We got here to learn and share in here. We got Kim. What's going on, Kim? Got Honey. What's going on, Honey? We got Lump up in here. We got Seawalk up in here. We got Rhonda Green up in here. What's going on, man? How y'all doing? Hopefully y'all doing good today, man. This evening, should I say. Y'all doing good this evening. We ain't gonna delay a whole lot. We ain't gonna shuck or jive. We gonna get right to it. Do y'all got anything for me? Sherwin, you got anything, Sherwin? Mm. Deborah, that's you on that picture right there, on that Zoom thing. That's you. Why I thought Deborah was like my complexion or something like that.
I am.
The devil is alive from that picture I'm looking at right now.
Those was just bright lights.
Oh, You out there looking light skinned like my mom on that picture. Jim, you got anything, Jim? Shout out Jim pulling up with some hard hitting narrative this morning for the gang. Jim said well, it's pretty obvious this morning that we're going directly towards this bearish weekly fair value gap that's above us, yada yada yada. And boy, I'll be a monkey's uncle. Let me flip over here to share my screen with y'all. I'll be a monkey's uncle if we ain't hit that doggone new week opening. I mean that doggone weekly bearish fair value gap up there. Right there. Y'all stop playing with Jim. Jim, I'm the biggest bird. I'm the biggest bird. I'm the biggest bird. I'm the biggest bird. Shout out Jim, man. Pulling up with the hard hitting Hey, where'd y'all go? Oh, there y'all go right there. Y'all had disappeared for a minute. Thought y'all ain't love me no more. Shout out Jim pulling up with the hard hitting analysis for everybody today. Let me see if I can. Let me see if I can move that out the way. That let me see if it disappeared. My video. Okay. Yeah. Get that video out of the way so we can see the whole chart. Can y'all can still hear me all right? Everything good. That ain't affect nothing because I turned the thing off. But that ain't yes, I can hear it. All right, man. Let's get right into it. Today,
that doesn't affect the size of the chart because we still see the spider.
you say you still see the over here in the
No, on the right it has the spider logo instead of your picture.
oh in the top right. So y'all see the spider, y'all like up here.
No, in Zoom we see the spider logo instead of your face, but it still takes the same amount of space, so the size of the chart is the same.
Yeah, that's what I'm saying. Like, cause when I'm looking at what's showing on YouTube, I can't see that up there at all. Like, I don't see like if I turn my camera back on, like this right here, now I'm up here in the corner. It's a big square in the corner over here. That let me see. So if I put a line over here, let me see if I can put a line to see exactly where it is.
Yeah, in Zoom you're not in the corner, you're actually to the right of the screen.
Yeah, in the right over there. Uh-oh. Get out of the way. It's this right here gonna drive me crazy if it don't let me do it. God dog it. Give me a line. Okay. What is this thing doing? Oh, I could do it like this right here. It keeps taking my thing away. There you go. Why does it keep doing that? Oh, it's driving me crazy. Okay. So if I put a line there like that, right there, boom. Okay. Right. And then I put a line right here. Oh, boom. All right. I know y'all like Tim, you doing way too much. Okay, so when I do that there, inside this little area here, if I draw that there, so inside this little area right here, where I'm drawing out, I reside right there when I have my camera on. Boop, boop, right? And then when I turn my camera off, like this, boop, I'm not there no more. I can see this whole, I can see all the way up there in the corner where it says publish, camera, TLR default. I can see all of that now. Is that not the same? Y'all can still, y'all can, okay. Whatever. I'm tired of thinking about it now. So this how I'm gonna do it. I'm just gonna do it like that with my camera turned off. And hopefully, you know what I'm saying, the size of the chart look right to everybody and everybody can see the full chart. Now everybody can see the full chart. Okay, so here we go today. We opened up over here. That's what we opened up at. We opened up right there at 20,443 even. Right. So if I click on this new week, why is that there? That should be on the top of there. That's on the bottom of that candle. How did you get on the top of that candle? Get on. How do I have such spotty price action? Right.
That's at the beginning of March.
Yeah. Week. I'm really tripping because it's a total different spot right there. Oh, that was an hourly count I was looking at last time. Was that an hourly count I was looking at last time? Yes, it was. It was an hourly count I was looking at last time. Right there. All right. Because I'm like, what is going on? Why is this? Yes, it was an hourly count I was looking at last time. So that's why. Okay, mystery solved. Right. I was on the hourly chart. So the hourly chart, that's we open up inside the hour. Let's go down to 15-minute chart right there. So there we go. 15-minute chart right there. Okay, so this is what we open up here at 20,413.50. All right, so now if I click on that, 20,413.50. Okay, so now that makes sense. That makes sense now. I'm tracking. We're cooking with Crisco now. Okay, now I'm really sleep. I'm looking at the new week opening gap from the 10th. Thank you, Jim. for telling me that's at the beginning of March. And I did not listen to you. Now that
Yeah, I wasn't sure what you were doing.
Hold on. Wait a minute. Rewind. Hold up, brother. Background rewind. Now, good evening. If this is your first time tuning in to Tuesday, oh my goodness. Oh my goodness. I don't know what's going on. Okay. The, the Zoom link in the Discord, Law. The Zoom link in the Discord. Didn't I put the Zoom link in the Discord? Thomas, yeah, Thomas just popped in. I see Thomas just popped in. Yeah, the Zoom link in the Discord. All right, man. Now that now that I have snapped snap back to reality. This is where we opened up today, right here. We opened up here at 20,050 and a half. 20,050 and a half. Look, do you see the Zoom link? Look, where's my phone? Yeah, hold on for a second. I just saw the picture. I just saw the picture with the Tesla logo. Say again.
Is my water bottle in there?
No, you took it with you. When I asked you what you hit your head on, you had it in your head. All right, I just sent it to you. Yeah. I just sent it to you, like, yo, the one we like, Musk.
We all good now. We cooking with Crisco.
This the picture I'm talking about. My brother sent me this today. Talking about the Tesla logo. Did y'all really know that this what the Tesla logo really was? What is that, right? Did y'all know the Tesla logo was really Elon Musk's butt? All right, man. Let me get serious, man. Y'all did not tap in to hear me with my antics. You feel me? Y'all ain't tap in to hear me with my antics. Okay. So here we go. We opened up over here at 20,050 and a half, right? Open up over there, 20,050 and a half. Overnight, heading into midnight, you see we start to move up. We never made an attempt to come down. right? If you see how we took off here, right? What do y'all think this daily candle would look like? What do y'all think that daily candle would look like? Look at this 15-minute chart. And we closed. Right, we closed there. What do y'all think that daily candle would look like? And right, look at this taps into what we was talking about the other day. Who was on the live the other day when we was talking about, you know, calling things what they really are and not what we feel like they are, right? Who was on the live when we was talking about that, right? When we was talking about, hey, what is the power of three? What is the power of three this? Is this the same as that? All that right there, right? Yeah, was y'all on him was talking about that? Yes, no, maybe so. Was y'all here? Right. I'm gonna one in the chat if y'all was here. Yes, no, maybe so. Right. Thomas says, no wick on the bottom, small wick on the top. Yeah. Oh, y'all know what? I gotta open up my Discord so I can get my sounds. I gotta open my Discord so I can get my sounds. I can't get my sounds without Discord. Okay. Yeah, gotta open my Discord so I can get the sounds, man. Y'all gotta remind me, Tim, you ain't got your sounds up. No wick on the bottom, small wick on the top. Shout out Thomas pulling up with the hard hitting answer, man. No wick on the bottom, small wick on the top, right? Let's go let's use this handy dandy indicator here. Look at Thomas, man. Look at that's the daily counter right there. Look at Thomas. No wick on the bottom, small wick on the top. Right? Now, was today a power of 3 day? Was today a power of 3 day? Empire Trade says kind of. Empire Trades, if you don't get off my live with a power of 2. What's today a power of 3 day? Why y'all so quiet today, man? Why y'all so quiet today? No. We got some no. We got no from Seawalk, no from Kim, no from Rhonda Green. We got a kind of from Empire Trades. Anybody else? Chat. Zoom chat. What's happening? Where y'all at? Zoom chat. Where y'all at? Was this a power of 3 days? Yes, no, maybe so. Gonna say no too. You say it with your chest, Thomas. Talk about gonna say no, yes or no. Say it with your chest. Yes or no. Hey y'all, Thomas gonna talk about some gonna say no too. Trending day. Say it with your chest. Was it a power of 3 day, Thomas? Deborah, Lump, Jim, What's happening? Y'all ain't got no response for me. All right, man. Shout out to everybody who pulled up and said no. Shout out to everybody that pulled up and who said no. Right? And then we'll give Thomas just a, because Thomas said he ain't gonna say it with my chest. He copied off of y'all paper, right? Thomas copied off y'all paper. Empire Trade said there was no consolidation with a question mark. There was no consolidation with a question mark. Yeah, there was plenty of consolidation today, right? We had some consolidation over here, right? We had some consolidation there. We had some consolidation here. There's plenty of consolidation today. No consolidation, question mark. So yes, today was not a power of 3 day, right? For this candle to be a power of 3 candle, what do we need, right? We need to see accumulation, we need to see manipulation, and we need to see distribution. We need all 3 of the verbs in that order, right? For it to be a power of 3. And when I say in that order, I mean from open to close, right? Somewhere after the open, right? Somewhere after the open, we have to see some type of manipulation, right? There was never any manipulation after the open in comparison to where we closed and in comparison to the high of the day. Price never manipulated down, creating a low. All we did was open and continue up for the rest of the day, right? We just opened and continued up for the rest of the day. So we never gave any type of accumulation at or near the open and then went into a stage of manipulation below the open, right? So in the sense of a power of 3 day today was not a power of 3 day, right? Hopefully this is a good illustration of what we always talk about when we say you can't just look at the candle and say, oh, today was a power of 3 day. All right.
Hey, on the candle you see me earlier had a wick on the bottom of it.
That was on the SPY.
Okay.
Yeah, that was on the SPY. The SPY over here. That was over here on this right here. Talk about this candle right here.
Yeah.
That was the SPY. Right. Shout out to Peter Popoff personal prayer package. It fought a good fight. The Peter Popoff personal prayer package fought a good fight, but to no avail. The algorithm is undefeated. When the algorithm gives you signatures, right? When the algorithm gives you signatures, I'm going to say a good 8 times out of 10. If there's no manipulation involved, right? And 10 out of 10, if there's no manipulation involved and you're on the right side, when the algorithm gives you signatures, it's going to do what it's supposed to do. If you're on the right side and there's no manipulation involved, right? Now, there are times when you may get ahead of the algorithm. It may be manipulation involved and they manipulate you out. But if there's no manipulation involved and the algorithm gives you a signature, then it's going to do what it's supposed to do, right? It's going to do what it's supposed to do. Okay. And for those who don't know what we talk about, with the Peter Popoff personal prayer package right here, we was talking about this area here, right over here. This area over here was not an area to try to be going short. Right? This area right over here, like with this green day right there, when we popped up here on this green day, right, we were saying this was not a good time to be going short and trying to come down to this low right here. That was not a good time to be trying to go short, right? The time to be going short, if you was aiming for that low, was over here, right? You want to be going short in this area over here. So once we came down there and you saw this pop up there, this day here was not the day to be going short, right? This wasn't the time to be going short because we were here, right? This was just pretty much chasing price at this point, right? We was there and then we just hung out in this area right here because this was, I think we put in the personal prayer package on this day right here and was like, we'll see what it do. I think this was the day we put it in. Might have been this day, one of these days here. And then, it did pretty much like we expected it to do. It started to go back up and come over here. But yeah, that was the SPY we was looking at that had a wick on the bottom. All right. So today was not a power of 3 day, right? Not a power of 3. Why is that? Because we didn't have all 3 elements, accumulation, manipulation, and distribution, to make it a power of 3 day, right? So remember, call things what they are when it comes to the concepts you're trading. No matter what you trade, if you trade ICT concepts like myself, or if you trade something else, call it what it is per those concepts. Don't try to blend concepts. Don't try to take a piece of this and take a piece of that, right? Call it what it is, because the concepts are designed to work with this set of material, right? Now, if you're going and you're creating something totally new, separate from what anybody else ever did, you can call it what you want. But if you're trading a certain set of concepts, stick to the what they are. Call things what they are, so there's no confusion and you're not looking for it everywhere, right? You're not looking for it everywhere. And remember, what is, besides time is king. We understand time is king. What is the most important thing when you're trading ICT concepts? If you're looking for an entry, no matter long or short, besides time, we know time is king. What do you have to have? What do you have to understand? What do you need to know? Say confirmation now, not confirmation. What do you need to know? Somebody help Empire Trades out. Where it's going. Thank you, honey. Shout out, honey. That's right. Where it's going. You need to know the narrative. Where my soundboard go? Where it's going. Right. You need to know where it's going. You feel me? Got to know where it's going. Got to know the narrative. What's the narrative? Where is price trying to get to? Right. Or there. Yeah. Are you looking at something on TV? Yeah. Come shut this door for me. I'm sitting up here, got the headphones on, and I just hear something rumbling in my ears. And I boy shut the door hard, snatched my green screen down and everything. Yeah. All right. I don't know. Could y'all hear that? Could y'all hear that? I just heard music rumbling in my ears. Hopefully it wasn't loud to y'all. But what was I saying? Where is it going? You need to know where price is going. Shout out Jim. Jim pulled up today this morning and did our analysis of the narrative this morning on the live stream. You know what I'm saying? And like I told y'all, he was like, hey, it's pretty clear that we're drawn toward this. Gave the breakdown of, you know, what price had done already. And, you know, just like gangbusters, as Michael would say, we drew up into the weekly bearish fair value gap. Let's go up to a weekly chart. Speaking of the weekly bearish fair value gap, right? We all know that we had come down into this weekly order block here, right? We talked about this last week. We're just getting our bearings together because it's a new week. We traded down into that bullish weekly order block, right? We traded down into this monthly bullish fair value gap. Okay, this is all this. Why does this keep dropping down? All right, we traded down into that monthly bullish fair value gap. We traded down into that weekly bullish order block, right? And then we closed, right? We closed respecting consequent encroachment of this weekly fair value gap right here. Okay, this is stuff that we had talked about, right? And then this week, then last week, we had come down and touched the weekly order block once again, did not make it down to the monthly bullish fair value gap, right? Hide him. Right, we didn't make it down to the monthly bullish fair value gap there. Okay, and then we closed the week. Well, it actually came right down to consequent encroachment of the weekly wick. The prior week's wick came down to consequent encroachment. Also, last week was an inside week, right? We had an inside week. We traded inside the range of the prior week. We had an inside week, traded down to consequent encroachment of the prior week's wick, and touched that the high of the weekly order block once again, and then we came back up and closed above this weekly fair value gap, right? So here we are. We find ourselves again. Where do we find ourselves again, everybody? We got a bearish weekly fair value gap, and we got a bullish weekly fair value gap. Where does that put us yet again? Shout out Marco pulling up with a hard hit now. Said, yes, honey. Honey going crazy tonight. Say it with your chest, honey. Say it with your chest. Say, I can't hear you. Honey, you need to be in the Discord so you can unmute and sing it. Shout out Kim pulling up with the hard hit answer. We are still in the middle of the road. We're still in the middle of the road. Ooh, I'ma tell Joshua. Joshua, honey said her chest is out. Joshua, honey said her chest is out. She out here in these ATL streets with her chest out. Joshua. Somebody come get honey. Somebody come get they honey. All right, we're in the middle of the road on the weekly time frame, right? Last week we closed again, closing above this weekly fair value gap, right? And so we talked about all of these being little bullish signatures, right? Everything we talked about being bullish signature. If there's anybody who's on here don't understand what's the big deal with this coming down to this consequent encroachment of this wick, right? Wicks are pretty much gaps. They're just like gaps, right? And with anything, any PD array, you can grade it, right? And you want to see that 50% hold with the wicks, right? It comes down to 50%. This is a PD array. It's a discount PD array. Why? Because price opened here and it's below price. It's a discount PD array. We come down to consequent encroachment of that, right? And where price is going to the left, that would be the first PD array you get to. So you're watching that wick, right? You're still watching the order block. Okay, so we trade down to the wick, just like over here. You're watching this inversion fair value gap right there, right? This is all stuff you're watching. The further back you go, right? The further back you go, I hate to say the lower you get on the totem pole, right? Don't want to say it like that, but you want to pay attention to the current price action first, right? You want to pay attention to the current price action first. Okay, so we have all of this stuff here that we're trading down into, right? But you want to pay attention to the current price action first. All right. So we have, that's the first thing. The fair value gap, right? And then as we come this way, right, we have a bullish, the wick. Then we come this way, we have a bullish fair value gap, right? And then we have a bullish order block, right? And then over here, down here, right, we see that there's a inversion fair value gap right here next to this balanced price range, right? So we got a lot of stuff that's down right here, a lot of different PD arrays and concepts that's right here in this area, right? So now we kind of see why this is some type of support. We have a lot of things that the algorithm left there, right, for us to choose as our support. Okay, so now since the weekly is showing bullish signatures right here at this monthly bullish fair value gap, this is our monthly anticipatory reactionary point, right? This is where we're anticipating price to go back up. Why are we anticipating price to go back up there? Because the monthly chart, right, when we come to the monthly chart, we don't need this. We don't need that. Get out of there. We don't need this right here. Get out of there. All right. When we go to the monthly chart, we see that down here on the monthly chart where we have our monthly fair value gap, right? That right there was our PD rate in the discount. On the old contract, we had touched the wick of this order block right here. There's no wick on this one here, but we had touched the wick of this order block. We traded down into the order block back then, right? We traded away and we had come back down and touched the wick of it again. But on this contract, we only traded back down to the fair value gap, right? We only traded back down to the fair value gap this month. On this contract, right? So this right here is our discount PD rate where we anticipate in price, right? Because on the monthly time frame, we've expanded up, taken out buy side, and then we're retracing back down into a discount, right? And this is our discount PD rate we were looking for price to be bullish off of. That's what made it our monthly anticipatory reactionary point, right? That's what made it our anticipatory reactionary point. All right. So now going back to the weekly time frame, and the monthly time frame was bullish, right? This gave us a very nice retracement. We went into correction territory on this retracement. We hit that monthly PD array. So now with these bullish signatures, right? With these bullish signatures, because we did get a weekly break in market structure here, a weekly bearish break in market structure, but that was expected because we expected the monthly to come down to this discount, right? Boom, got the break in market structure. So now these bullish signatures are lining up with the monthly bullishness, right? So the next signatures you want to see if the weekly is truly aligning with the monthly's bullishness is to get above this weekly SIBI and use it as an inversion fair value gap, right? Get above it and use it as an inversion fair value gap. Now, remember, we have a breakaway gap here, right? We got a breakaway gap there, right? So you have some stuff to go through. We got a breakaway gap there, right? Got to go through. We have a bearish order block here, right? You would have to go through. Okay, got other stuff there too. You got, I ain't gonna dig through everything you got there because this is a bunch of consolidation, and we can sit there and pick all day looking for a bunch of, oh, we got this, we got that in that consolidation. But all things considered, we got a bearish order block and a bearish breakaway gap there that we know for sure that we got to fight through. But, and this is all on the weekly time frame. Okay, this is all on the weekly time frame. So we're looking for a weekly candle to get back above this and then use it as support, as a inversion fair value gap. Does it have to happen in 1 week? No, it doesn't. Right? These are weekly candles right here. And look how long we stayed in this area before displacing away. Right? Before displacing away from this area right there, we was in this area for a whole bunch of weeks. Right? We pointed that out before. Right? So once we got into that area and traded back down into it, we stayed in that area for 10 weeks. Right? That's 10 weeks across there before leaving that area. 10 whole weeks. We stayed in that range there. That's a very long time. All right. So now, looking for the bullishness, if the weekly switching sides are showing bullish signatures to align with the monthly, you watching the weekly to continue to make bullish signatures, right? So that's the next bullish signature you're looking for on the weekly, is to come up here and create an inversion fair value gap, right? Again, if you make it this week, so be it. If you get up there and then next week you end up getting there and closing above it, so be it. But that's just the signature you're looking for on the weekly time frame to see if it's still in alignment with the monthly on the bullishness, right? Don't try to force it. Weekly, it's a weekly thing. Excuse me, it's a weekly thing you're looking for, right? You look for it to play out on the weekly. Now, going here on the daily time frame, right? On the daily time frame, we did. Do I still have them? Let's see if I still have them. We were watching fair value gaps. This fair value gap didn't exist in the new contract, right? But we were in between that fair value gap and we were in between this fair value gap on the daily. That was last week, right? That fair value gap and this fair value gap, right? The bearish and the bullish, right? This bullish one doesn't exist on the new contract. But before we switch contracts, we said that because the weekly was showing, let's go back to the weekly. Because the weekly, right here, we were saying it was showing respect for this and this, right? We were looking for it to come back up above that fair value gap there, right? So that was, we're going to put a line there for when that week closed, when we first started talking about that. All right. And then last week, I put another line here. When we go to the daily, everything in between those lines is going to be last week's price action. All right. For those who don't know what I just did. All right. Let's go back to the daily chart right there. So when we were here right there, we said that since the weekly had aligned with the monthly and we were looking for it to come above this, right? And the daily, we were here consolidating there, engineering new liquidity. We were respecting this fair value gap, respecting that fair value gap. We said we had created a low, we created a high, right? And we was just waiting to see what it wanted to do. And then as the weeks, and then we said, if it's going to stay in line with the weekly, you want to see it get on top. You want to see it close above this fair value gap here and use it as an inversion fair value gap to send you above the weekly fair value gap, right? So it didn't happen in the prettiest manner, but we opened up at the beginning of the week and we closed above it, got the inversion fair value gap, right? Engaged the buy side liquidity, right? We traded back down into the order block right there. We just gonna say order block. It's not a confirmed order block yet, but in the sense of the narrative of price being bullish, right? Once we started to expand away and take out that liquidity there, right? We trade back into this down close candle. You want to see down close candles act as bullish order blocks. Okay. All right. So we have an area of consolidation and we start to move away and we trade back down into the down close candle and it's acting as a bullish order block, right? We also have this volume imbalance down there slash new day opening gap, right? We got a new day opening gap there that we trade back down into, right? And then we come back. So this pretty much this whole week we just consolidated. We talked about this too. We just consolidated this entire week, right? And then when we look at the weekly candle, right? When we look at the weekly candle, we saw that it was like a really small candle, right? With a wick on the top and the bottom. And that was like just a consolidation candle. And then we saw that we had traded inside the range of the prior week, right? So we had an inside week there just consolidating, right? All in all, we created the inversion fair value gap, traded down into the down close candle, and then traded back up to consequent encroachment, closed at the low, and then closed just off the high on Friday. And on Friday, before closing just at the high, we came down and swept all the sell side that was created for the whole week, traded below every daily low that was created throughout the week on Friday and closed at the high, right? And we said that was a very bullish move, right? That was a very bullish move. And then after sweeping that liquidity, then we opened up this week and we've taken off, right? Using this as a springboard, right? Using it as a springboard to take us up. But Tim, if we never traded to it, how do we use it as a springboard? Because the algorithm don't care about when we say you got to stop. You got to stop. It don't care about that. It's revving to go. So when we turned it back on, right, it had traded, it took the liquidity, traded back up into this SIBI, closed at the high of it, right? And then when it turned back on, it kept going. Pew, kept going above it, right? All the way back up where to the new week open. I mean, the bearish fair value gap that we was talking about. You want to see price trade above and use as an inversion fair value gap, right? So on the daily time frame, right, the next signature we was looking for was using this as an inversion fair value gap, right? We're above it now, right? We're above it now. So now if price decides it wants to come back down this way, you will want to see that support price, right? Would that be exceedingly bullish if it traded back down? Like as soon as we leave it like that right there, you can look at it one or two ways, right? You could be trading down to get an immediate rebalance, right? To continue up sharply, or it's still ranging, right? We're still Christmas tree trading, right? We won't know until this happens, right? All we know is the signatures we are looking for, right? We don't try to interpret, is it, you know what I'm saying? Is it raring to go? Is it revving to go? Is it no? We just know the signatures we're looking for. If it decides to want to come back down, right? We want to see signatures on the lower time frame that support the fact that, okay, now that it's here, I want to continue bullish, right? If it decides to pull back into this range, if it decides to come back down, we want to see signatures showing signs that, hey, this is a potential immediate rebalance and we're revving to go and get out of here based off these signatures on the lower time frames. All right, making sense to everybody? Hopefully it's making sense to everybody. Turn this replay off. All right, and then as you go down, we go down for detail, right? We go down for detail. This is when we said on Friday, we came down and swept that low right there. Right. On Friday, we came down and swept that low there. Okay. So what does that do? That gives us a Judas swing here, right? 4 hour is in line with what the weekly was saying, in line with what the what's going on, Korean? Align with what the daily was saying, right? It's showing signatures, it's showing bullish signatures, right? We see bullish signatures. And now that and looking here on the 4 hour time frame, right? On the 4 hour time frame, we talked about this before. We said that when we came down and took out this low and didn't trade into that low right there, that low right there was acting as a protected low, right? We want to see that because we was looking at that as our smart money reversal. So we wanted to see that low not be taken. The low did not get taken, right? We expanded up, we came back down, right? And then we kind of hung out in this area for a while. And then we got a sweep of liquidity right there with displacement up, right? Sweep of liquidity with displacement up. Okay, so what is this right here? When we came down and got that sweep of liquidity, right? What is that start of? That's evidence of what? That is your first sign of what? First piece of evidence of what? When we get that dip into a discount and sweep out liquidity. That's the first sign or evidence of what? What's happening, Joker? What is it in? Is it order flow? Is it order flow? No, it's not order flow. What is it in? Which one is it in? Y'all help me out. Which set of slides is it in? No, not reversal, Rhonda. Not reversal. Which what's that? That's evidence of what? That's the first evidence of what? Right. Uh-oh. That's the first evidence of what? First sign of what? Come on. Somebody say it with your chest now. What is it in? Is it IPTA? It's not displacement. Is it displacement? Come on now. It's all on the screen now. It's all on the screen now. What is it? It's the first sign of what? Hello? Hello? Is there anybody out there? I always forget institutional sponsorship. Shout out Honey for pulling up with the hard-hitting excuse before she answered. Institutional sponsorship. Right? Institutional sponsorship. So if the weekly time frame, if the monthly time frame is bullish, the weekly time frame is starting to show bullish signatures, and the daily is starting to show bullish signatures, right? And the 4 hour is starting to give you signatures of institutional sponsorship. Which signatures are you going to be looking for, bullish or bearish? Right? You're going to be looking for bullish signs of institutional sponsorship, because the higher time frame, the monthly, is bullish, and we've retraced back down to a discount PDub rate where we're anticipating price to spring off of. The weekly is now showing bullish signatures. The daily is showing bullish signatures, respecting the discount PDub rate, showing bullish signatures. So we're now on the 4-hour time frame. You're looking at, who's that deleting comments? Who I see comments deleting? Kim, say it with your chest. Say it with your chest. What you deleting the comments for? Say it with your whole chest. Right? So you will be looking for institutional sponsorships for long setups. Right? You will be looking for institutional sponsorship for long setups. Why is that? We said it already. Now, what are the signs or signatures of institutional sponsorship? Higher time frame price displacement, right? Either reversals, expansions, or returns to fair value, right? Intermediate term imbalances, imbalance in price, a move to discount or sell side liquidity runs, short-term buy liquidity above the market, right? So that's a spot where you're looking to hit your low-hanging fruit, ideal for pairing long exits to sell. That's your low-hanging fruit. You're pairing that low-hanging fruit, right? And then you can look at stuff like time of day influence, right? We're on the 4-hour calendar, so we ain't worried about time of day influence right now. So since we're looking for bullish institutional sponsorship, right, and we're on our 4-hour time frame, and we're hanging out here consolidating, we know on our daily we had set a low and we had set a high, right, on our daily time frame. On our 4-hour time frame, we came down and took out this low, right, but did not take out that low. That low is active protected. After we took out that low, left this low, right, we traded down into the order block, right, this rejection block, right, this candle here came and closed inside the rejection block, took out that low, and then we displaced away and took out that high right there, right? So actually, right, this right here was the first sign of institutional sponsorship that reared its pretty head. And which one was that? Right? The reverse. Right? The reverse right there. That was the first sign right there. Right? Because price dropped down, took out this low, didn't tap that low, and then turned around and took out that high. Right? We took out external liquidity for this price leg right here. That's the high. That's the low. Right? We came down, took out external liquidity, reversed and took out external liquidity. So that's actually the first one right there. Just going back, looking through price, right? I even missed that one, right? That's the first one there. The reversal. Once we got the reversal, we started to consolidate right here, right? Once we started to consolidate, we got, boom, the price run, the liquidity sweep right there. Move to discount or sell side liquidity run, right? Price moved to a discount and swept sell side liquidity, right? Once we did that right there, right? This is the one that's easy for my eye to see. The sweep of the liquidity, the move and sweep in liquidity, right? That's the one that's easy for my eye to see. Like I say, I even missed this one right here. I missed the reversal, right? So, and then short-term buy liquidity above the market, right? What do we have right here, right? We engineered buy side liquidity right there, right there. We got a high, relative equal highs, move to the discount, got an area for your low hanging fruit right there. So once we came here, what's this right here? This is displacement, right? Trading right back there to that liquidity, right? And when we go ahead and look at these charts right here, right? You see that right there? We came down, swept the sell side. Put this over here. Isn't it crazy how, hey, what you doing? Why is it not giving me the option to pick this? It don't do it when Zoom be sharing the screen. Okay, I got to do it the hard way. I wonder why it's not giving me the option to pick this one. It's giving me the option to pick everything else except for this right here. Okay. So, right. So we come over here, squash this up a little bit. Isn't it like kind of weird how this stuff be like looking the same, right? So we see over here, price trades up, comes down, and it drops down, and it says sales stop runs, right? Got sales stops right there. All right. Let's go ahead and put a line here like this. Right? Like this right here. So price goes up, comes down, sales stop runs, sales stop runs, right? Right? Sales stops, go down, boom, sales stop runs, right? We poke under there, we run them stops, okay? Then right there, high probability stops up there. See them relative equal highs right there? You got a high and a high. Oh, what's that over here? A high and a high. Relative equal highs right there, right? High probability. What makes that a high probability high? Because it's relative equal highs. What makes that a high probability high? Is relative equal highs right there, right? This in this right, y'all, can y'all see the date on the bottom of this right here? Let me blow this up a little bit. Blow this up a little bit. Right? Uh-oh, went too far. Y'all see that date right there? That says November 2016. Right. This slide was made November 2016. All right. I just wanted to put that out there. Right. Just wanted to put that out there. This slide was made November 2016. Okay. And then click there and you see what that says right there? Higher time frame displacement. Right. And then what do we get over here? What's going on over here? Wait a minute. Is that like some displacement there? Does that not look eerily the same? Right? Does that not look eerily the same? Right? It looked the exact same. Right? But there's no algorithm. This stuff doesn't work. This stuff doesn't really work. This stuff doesn't really work. So there we go. We got yeah, that's it. So the 4 hour showing the evidence of institutional sponsorship there, right? And so now we have taken out the buy side and we got the displacement, right? So if price does this, then it should do that. And we're walking through it piece by piece, right? If price does this, then it should do that. The evidence of the institutional sponsorship taking out the lows. Now we got the displacement away, right? If price does this, then it should do that. Okay. And you just continue the cycle looking for signatures, right? The lower you go, you want your lower time frames to give you the detail that is supporting or invalidating your higher time frame narrative, right? And you don't invalidate your higher time frame until it comes to your higher time frame invalidation point, right? So if this is your higher time frame invalidation point, this retracement taking out that low does not invalidate the bullishness, right? Moving down below this low doesn't make you say, oh, we're going down now, because you know that this was your, not saying that it is in this one, I'm just picking it, right? Even though in this case, that was like one of our invalidation points. But if that's your invalidation point on the higher time frame, when you get a pullback like this on the lower time frame, you don't switch your narrative because you haven't reached your higher time frame invalidation point, right? Tracking makes sense to everybody. Get it, got it, good. All right. And then so now that we've backtracked all the way and got our mind back together in reference to where we were in price last week, now that brings us here to today. And we opened up the day, like we said, was all gas. Trend day to the upside. Did not stop, we did not even retrace deeply at all, right? We didn't even, once the same thing happened with midnight. Once we opened here at midnight, right there, right, we sold down, and then we never came back to midnight again, right? Dropped down below that low, right? And then it was nothing but up for the rest of the time, right? Now, in the sense of after midnight, right? In the sense of after midnight, this part of the day is a power of 3 day. In the sense of after midnight, right? So in the sense of after midnight for the day, right? If you only count from midnight in the algorithms world for a new day, this is your new day starting here, right? And this would be a power of 3, right? Because this candle would open here, have a low there, right? Have a high up here, and then have a closure around here, right? So that's what that candle would look like. And we opened, went down, made a high, then closed off of the high where we traded above an old high over there, right? Traded above an old high and distributed positions above an old high and closed off of the high. In the sense of after midnight, that's a power of 3 because we got the accumulation, manipulation, and distribution, right? Okay, dope. Going into 9:30, everything was pretty much up all day. All right. So coming into 9:30 here, we had traded up into a bearish fair value gap, right? Coming into 9:30, we had already traded up into a bearish fair value gap. At 9:30, we dropped down, right, below this 15-minute low there. I told the gang this morning as we were watching price, like, since we are so extended, we were extended like over 300 points from here, and we opened up right there. We were so extended. I said, I personally wouldn't be looking to trade nothing unless we came down and swept out. I think it was a 15-minute low over here somewhere because it was in line with, and we saw that it was in line with a 4-hour. I think this was it right here. There was a 4-hour bullish fair value gap in that area. Let me mark this out and I'll see if that's the one that we were talking about. Right. So we had a 4-hour bullish fair value out. Like if we come down and sweep out that liquidity, it may have been this one. 2 a.m., 6 a.m., 10. Let's see if that's it. Yes, that's it there. Right. So like if we come down and sweep that liquidity there, then I would be looking for a long to take back up here to this fair value gap, right? But since we're so extended, I personally wouldn't participate in it because we're too extended, right? But we still went in and looked for signatures that look for bullish signatures that played out like gangbusters. All right. Just for tape reading purposes. Okay. So we came down, traded below that 15-minute fair value gap. Right. Let's drop down to a 1-minute time frame real quick. Right. And you'll see here what we marked out. We have marked here. We said that this right here, this is 9:30. We said that this right here was our first presentation. Right. And then if you see here, there's another one here where it says first presentation by narrative, right? So based off the narrative of coming here, right? This right here is your first fair value gap that was presented that agrees with the narrative. That's a gem that Michael dropped in a video. I ain't finished that video, y'all. So I missed that what Tish said, but Tish, if you're watching the replay, tell your son happy birthday, and we'll see you tomorrow. All right. Michael dropped a video and he talked about your first presentations, right? And you want to utilize the first presentations that agree with the narrative, right? You want to utilize the first presentations that agree with the narrative. All right. So as you see here, right, we got our first presentation there, right? We create a bearish fair value gap, right? Little one, man, all Tish kids grown. Tish somebody grandma. Ain't no little one. That's why I be called honey. That's why I call her honey. Because she say, no, I'm not a grandma. I'm honey. I'm honey. Anyway, we got our first presentation there, right? And it's a bearish fair value gap that's created in the discount of a move, right? If we get a bearish fair value gap created in the discount of a move, right, then we're looking for that to become an inversion fair value gap. Okay, so we got our first presentation, right? And then we were looking at this right here before we even identify this as the first presentation based off narrative, and before we identified this as the first presentation, right? We had already identified this in regular trading hours because we was looking at regular trading hours saying that we are super extended. But since we are super extended and based off of statistics, right? Michael teaches that if you got a opening range gap of more than 125, I think he said, right? Then you're not anticipating price to trade back in and try to do a gap fill based off the statistics, right? It's more probable, I don't know the percentage, but it's more probable that if it does retrace, it will only come to the top 25%, right? If it does want to retrace. And then as you see, that top 25%, if it did want to retrace, that would put it right here at the area where we was talking about. This is the area where we would like to go long. So that was just more confluence about that area. But we also pointed out that if price is exceedingly bullish, then we won't see that. This right here will act as the support to take us higher, right? So we had already pointed this out as the point where we want to see price stay above, right? We want to see price stay above there. And then once we pointed all that out, then we went down and figured out, hey, this is our first presentation. This is the first presentation based off narrative. So this is where we want to see price be supported. All right. And now that price is there, right? Now we see that price is there. You say, hey, Tim, but it went to both of them. I'm glad you said that, because if we look here, right, we see our price ran up there and took out that high right there, and then ran down there and took out that low right there, right? Since we're bullish, right, we're looking at, you would look at this as a potential wig snatcher. And boom, there it is. You got it right there. So now you got this move here, right? So what does that give us here? That gives us a bullish breaker right there. What is this right here? This is an inversion fair value gap in that breaker's leg. When we have an inversion fair value gap in the leg of the breaker, what did Michael say? You want to see price come down to that inversion fair value gap to give you a better entry. But what is that? That is the very first fair value gap that was presented during this opening range, right? So that was the very first fair value gap. So the algorithm came back down to that very first fair value gap all the way to the low of it, right there, right? But the whole time we're trading down, and this candle here is respecting this fair value gap. This candle here is respecting this fair value gap. This candle here, where the wick is doing the damage, is respecting this fair value gap, right? So before it gets out of there, wick down one time, taking out anybody who had their stop right there. Wick, gotcha. Anybody who had their stop right there, wick, gotcha, right? And then got on up out of there, right? Took it up, come back down to the inversion fair value gap on the hourly, right? Because we didn't got above it. We've closed above it. Come back down into the inversion fair value gap on the hourly time frame. Okay. Then we start to continue up after trading back down to the consequent encroachment of that inversion fair value gap on the hourly, right? Then we continue up, continuing to take out highs, trade down, take out highs, trade down, take out highs. Then we traded down and took out a low right there, getting ready to go. This is at during the 11:30 hour, right? Well, 11:30 hour, but during like after like around 11:30, Mike could talk about at 11:30, right? Start the possible run on opposing liquidity, right? 11:30, talk about the possible run on opposing liquidity, right? And what are you looking for that opposing liquidity, right? We come over here, we get us a line, and we move this over here, right? Around the 10 o'clock, like the 10 o'clock, 10:30 time frame, right? So we just go over here, drop that as close enough, right? When you come from 11:30, you start looking to the left, the first swing low or swing high you come into contact to, you can anticipate that being rated at the minimum, right? And then what do we do here? We come down into that low right here, right here, right? Come down to it. Did we take it all the way out? No, we didn't. We came and kissed it, but we went down to it, and then we went up, and then over here going into lunchtime, we eventually traded down below that low, right? And then we went to the afternoon time frame, right? went to the afternoon time frame, and we started to move back up again during the afternoon time after taking out some lunchtime, took out some morning liquidity here, and then we came back there during the afternoon time and took out a lunchtime low here, popped below a lunchtime low there, and then made our way back up. So we see that lunchtime starting at 11:30, we came very close to that low, right? Didn't quite get it, created relative equal lows, traded up, took out the buy side, right? And then during lunchtime, we came down, took out a morning low, right? A rate of morning low during lunchtime, right? Continued down a little bit more, took out another low, then going into the afternoon session, right? We got a rate of lunchtime low and then displaced up, coming back up above the high, and then coming up and closing off of the high over there at the close of New York, right there. And that there is your price action recap for today. Seeing some lovely algorithmic signatures throughout the day, even on a trend day. Right. Does anybody have anything for me? What's going on, Yolanda, when you popped up in here? Does anybody have anything for me? Hmm? Nothing? Nothing? All right. We'll take it as a nothing. We will take it as a nothing. Hey, man, I appreciate y'all. Oh, anybody that's still in here. For anybody that's still in here, the poll is closed. Right. The poll is closed, and the gang has said that um they want to do what they will participate with the Conquering the Asian session. So it's official. I will be doing the Conquering the Asian session workshop. Right. I will be dropping the WAP link on April the 1st for the gang. I will drop it in the Discord on April the 1st for the gang. Dropping it in the Discord. The actual workshop will be May 12th through May 23rd, right? It will be on sale from April 1st through April 30th, right? Or whenever it sell out, right? April 1st through April 30th, or whenever it sell out. I'm only doing it for up to 25 slots, right? So 16 people said that they would be participating in the gang, right? And I'm only opening it up for 25 slots. On April 1st, I'm releasing the link for the gang. On April 8th, I will release a link to the public if anybody that's not in the gang would like to join. The cost for the gang will be $100. The cost for non-gang members, I have not decided yet, but it will be more. Right? It will be more for non-gang members. I haven't decided on what the actual cost will be for non-gang members, but it will be happening. I will pre-record some videos because during the 2 weeks, I'm not going to be entertaining any teaching type things. I'm not going to be talking about this is what this is what that is. I'm not going to be talking about anything like that. So I will pre-record videos that's explaining certain concepts, stuff that you need to be familiar with. I pre-record videos explaining certain concepts that you need to be familiar with, and um, you will have access to those videos. You'll have access to those videos to be able to watch them before we get started with the program. Right before we get started with the program. So make sure you watch them videos if you're not up to speed with ICT concepts. This is for anybody who's not part of the gang right now. You really ain't clear on ICT concepts. And even if you're in the gang and you need a refresher on stuff, make sure you watch those, because I'm not going to be entertaining or teaching anything during this time. Right. I'm going to be, you know, watching the price, and we can do Q&As, but it's not going to be like a teaching thing like, hey Tim, what's a breaker? Hey Tim, what's a volume imbalance? Hey Tim, what's it? We ain't getting into all of that right there. All right. So with that being said, tomorrow is Tuesday. No tape reading session tomorrow. The tape reading session was kind of light this morning. I don't know where y'all was at this morning. Today should have been the diamond members and mentees, but I ain't seen nothing but like a handful of people in there this morning. I know some people were sleeping. I talked to some people, they said they were sleeping. Them fat old men, they were tired, they couldn't get out of bed this morning. But yeah, man, that's it. I'll see y'all tomorrow at 6 o'clock for the price section recap. Uh-oh. Uh-oh. Where's my, I don't know where my thing went. I guess I closed it. I guess I closed it. Guess I did. I guess I closed it. All right, man. Till next time I get on Al Gore's internet and decide to share my things. I share my things. Decide to share my thoughts on this thing that we call price action. Is your boy Timothy Lee Rogers, aka Aranya Grande. Y'all be safe out here. These trade streets, man. Gone.